Once the unrivaled leader in the market for electric vehicles, Tesla is now confronted with several existential threats that threaten its position as the dominant player in the market. Several factors have contributed to the current predicament of the corporation, including declining sales, an outdated product selection, growing competition, and the contentious political entanglements of CEO Elon Musk. The relentless rollback of regulations that are advantageous to electric vehicles by outgoing President Donald Trump is, however, the most severe threat that has emerged in recent times. Tesla is forced to negotiate an unpredictable market as a result of Trump's decision to withdraw federal mandates and subsidies for electric vehicles. The company's former advantages are starting to erode. An analysis of the complicated web of events that have contributed to the drop in Tesla's stock price is shown in this article. These reasons include Trump's policy shifts, Musk's political allegiance, and Tesla's altering position in the electric vehicle market. Rollback of Trump's electric vehicle policy, a major setback for Tesla. Donald Trump's decision to repeal key electric vehicle policies that had been the driving force behind Tesla's success is one of the most crucial reasons why the firm is having such a difficult time. Tax credits for electric vehicle customers, federal investments in charging infrastructure, and stringent pollution standards designed to phase out gas-powered automobiles were some of the incentives that Joe Biden implemented during his administration to speed the adoption of electric vehicles through the use of incentives. A large number of Tesla purchasers benefited from government tax credits, which made their automobiles more cheap. This stimulated demand for electric vehicles. The absence of these incentives may result in a decrease in demand, particularly among consumers who are sensitive to price. Changes occur throughout the playing field. When it comes to the electric vehicle market, Tesla has been gaining ground on legacy automakers such as Ford and GM. The investment in the charging network is in jeopardy. As a result of the enormous cash that was committed to building charging networks during the administration of Vice President Joe Biden, Tesla benefited somewhat indirectly. The reaction of the market was very quick. Following the revelation of Trump's pullback, Tesla's shares sank by roughly 3%, indicating that investors are concerned about the future of the firm in a climate that is less favorable to electric vehicles. The public's reaction is fueled by Elon Musk's controversial involvement in political affairs. Elon Musk's growing familiarity with Donald Trump is a factor that is contributing to the financial difficulties that Tesla is experiencing. Under the administration of President Trump, Elon Musk, who was once considered a forward-thinking entrepreneur in the field of technology, has been appointed to a position as a government advisor in the Department of Government Efficiency. Outrage has been created as a result of this action, particularly among Tesla's consumer base, which is more ecologically sensitive. Demonstrations and acts of valor. Angry customers have demonstrated at Tesla dealerships, and some of the locations have even been destroyed. As a result of their actions, Musk's political attitude has alienated consumers with liberal leanings, notably in major markets like California and Europe, where Tesla once enjoyed significant support. This has resulted in a loss of consumer trust. Despite falling sales, Tesla experienced its worst quarter in years. Tesla's sales stats are already showing the impact of Trump's policy shift and Musk's political drama. Both of these factors have had an influence. With only 336,681 vehicles delivered in the first quarter of 2025, the firm recorded a 13% decrease in global vehicle deliveries. This figure is significantly lower than the 390,000 that analysts had anticipated. This decline is especially upsetting due to the following reasons. It is the worst performance that Tesla has had since the pandemic happened. Especially in a market that is expanding for electric vehicles, a drop of 13% year over year is a huge warning sign. As a result of competition, Tesla's market share is decreasing. Competitors including BYD, Hyundai, and Volkswagen are gaining ground, notably in China and Europe. Following the revelation, Tesla's shares initially experienced a decline. However, anticipation that Musk could stand down from his role in the government helped to stabilize the market. On the other hand, it can take more time to repair the harm done to the faith of customers. Implications of Trump's Liberation Day, tariffs for the economy. The newly implemented Liberation Day tariffs by President Trump which impose a charge of 25% on automobile imports, are adding another layer of uncertainty to the future of Tesla. Even though these tariffs are primarily directed at foreign automobile manufacturers, Tesla is indirectly affected by them. Potential advantage of protectionism. In principle, the tariffs might make imported electric vehicles more expensive, which would provide Tesla an advantage in the market in the United States. It is possible that tariffs placed on imported components would result in an increase in the manufacturing expenses of Tesla, which will force the business to either increase its prices or accept a reduction in its profit margins. In addition to the challenges posed by political and economic causes, Tesla is also facing difficulties in the form of an aged product selection. The electric vehicle market is going through a period of transition, but Tesla is not. The Model S and Model X have an air of antiquatedness about them. The majority of these high-end models have remained relatively unchanged over the course of several years, while competitors have developed alternatives that are more contemporary. China's BYD is making progress because the Chinese electric vehicle EV company BYD is currently outselling Tesla in numerous regions by providing models that are both more affordable and more diversified. While Tesla has to refresh its range and offer new, innovative models to keep its competitive edge, the company is seeing a decline in sales and shares, which may make it difficult to secure funding for initiatives of this nature. In conclusion, Tesla is facing a treacherous path ahead of it. Tesla's stock is being pressured from a variety of different directions. The market for electric vehicles is being threatened by Trump's decision to scale back regulations and subsidies, while Musk's controversial political engagement has alienated an important consumer base. There has been a decline in sales, the level of competition has increased, and Tesla's inventory of older vehicles is losing its attraction. If you enjoyed this, don't forget to like, subscribe, and comment your thoughts below. Let's keep the conversation going.